we can introduce ourselves. My name is Wednesday Jordan. I'm with the Department of Agriculture, Trade, and Consumer Protection, and I'm the Farmland Preservation Program Manager here. I'm joined by...
My name is Randy Stilling. I'm from the Wisconsin Department of Revenue. I generally handle the farmland preservation tax credits as they come in.
All right, to give a brief overview of the Farmland Preservation Program, there's a couple components that make this up. So first, in order to participate in the program, the county needs to start with a farmland preservation plan. Now this kind of acts as the foundation of the program. This identifies areas where farmland should remain for the foreseeable future. These plans are done by the county with local input, but generally lay out where the areas that the community feels like should be protected for the agricultural future. Then we move on to kind of our participation routes. So the first route are our certified farmland preservation zoning districts. So these are done locally. Different municipalities can certify a farmland preservation zoning district if they have zoning in that area. And folks within those certified farmland preservation zoning districts can choose to participate in the farmland preservation program and claim the farmland preservation tax credit. On the other side of that, we have our agricultural enterprise areas. Now, these are districts that are identified locally by community members who put together a petition in conjunction with local governments and other agricultural partners, saying that this area is agriculturally important to our community and also should be considered agriculturally important to the state. These are designated through a petition process, and each year we have a petition open for folks to apply for these agricultural enterprise areas. Within an agricultural enterprise area, landowners can sign a farmland preservation agreement. These agreements are 15 years agreements between the landowner and the state, where the landowner is committing their lands to agricultural use and committing to following the state soil and water conservation standards, and in return, they're able to claim the farmland preservation tax credit. So there's one extra step to our AEAs for people to participate where farmland preservation zoning, they can start participating if they meet all the eligibility requirements. But both of those folks in our farmland preservation zoning districts and folks in an AEA with a farmland preservation agreement can claim the tax credit. Now, our zoning and our AEAs can be used together, layered together in some areas. So landowners in those areas where they're layered can access a higher tax credit. They can also be used separate. It just really depends on which county these landowners are located in, or even which township. We also still do have some agreements that were signed before July 1st, 2009. July 1st, 2009 is when we had a program shift, and it kind of changed how we deal with the program, but we do have some of those pre-July 1st, 2009 agreements out there that will exist outside of an agricultural enterprise area or a certified farmland preservation zoning district. They may not. But if you're dealing with your clients, you might want to ask them if they have a farmland preservation agreement, what year they signed it, because that will help you determine, you know, how to move forward with the tax schedule and which one they should pick as preferred. Speaking of picking the correct tax schedule, there are two main tax schedules with this program. The first is tax schedule FC, and then we have tax schedule FCA. So when you're working with farmland preservation agreements only, if the agreement was signed before July 1st, 2009, you're going to be filing that tax credit claim using Schedule FC. If that agreement was signed before July 1st, 2009, and was modified through a modification application and process with the state, then they'll be filing using tax schedule FCA. If you have a client that has one of these agreements and is modified, you're just going to want to talk to them about that and get a copy of that modification so you have that on record for their claims to the Department of Revenue. if the agreement was signed after July 1st, 2009, and it is located in an agricultural enterprise area, then you're going to be filing using Schedule FCA. So now we're going to get into some of these scenarios where we'd have agreements layered with farmland preservation zoning districts. So if you have a landowner who has a signed pre-July 1st, 2009 agreement, and they are located in a certified farmland preservation zoning district, you have some options here that you might want to discuss with them. So the first option would be to file using Schedule FC and claim at 80% of the calculated credit base on having that agreement, or you can file using Schedule FCA and claim the tax credit based off of the Farmland Preservation Zoning District rate. Moving on, if you have a post-July 1st, 2009 agreement in an agricultural enterprise area and they're located in a Farmland Preservation Zoning District, you will be using Schedule FCA. And if you have landowners that are only located in a Farmland Preservation Zoning District, then you'll be filing using Schedule FCA. So the eligibility requirements to claim, and these are universal for all of those folks who are going to be applying for this tax credit. They have to meet the applicable soil and water conservation standards. We will talk about what those soil and water conservation standards are, just so you have that kind of knowledge in your back pocket. But it may vary depending on how they're participating, and we can talk about that when we get to that point. Next, they must be a Wisconsin resident and be the landowner of the eligible land. So this tax credit is only available to those landowners. It would not be available to renters or operators of the agricultural land unless they are also the landowner. Third, they must have produced $6,000 in gross farm revenue within the tax year, or $18,000 of gross farm revenue within the tax year and the 2 prior years before. And then lastly, the last eligibility requirement is to have not claimed the homestead or veterans and surviving spouses property tax credit the same year that you're applying for the farmland preservation tax credit. All right. So the tax credits that are available to landowners really depend on how they're participating in the program and what schedule they're filing under. So under Schedule FCA, the amount a landowner may be credited by filing a claim on the tax Schedule FCA is calculated based off of their household income and the amount of property taxes paid in the applicable tax year. So this kind of means that a lower income and a higher property tax means a higher tax credit. If you are looking at the instructions for tax Schedule FC, it does have a table there that can kind of help you guide through that process of figuring out what that tax credit would be. Under Schedule FCA, it is a flat per acre tax credit depending on how you participate in the program. So the first tax credit rate is $5 per acre if the land is in a signed farmland preservation agreement inside an agricultural enterprise area, or it's a modified pre-July 1st, 2009 farmland preservation agreement. The second tax credit rate is $7.50 per acre if the lands are located in a certified farmland preservation zoning district. Now, if the lands are covered by both a farmland preservation agreement in an agricultural enterprise area or a modified pre-2009 agreement and they're located in a farmland preservation zoning district, they can claim $10 per acre. So now we're going to talk a little bit about Schedule FCA and the attachments that you want to include when you're filing for a claim. When you're preparing that documentation, you're going to need the following. So first, you'll need a copy of the property tax bills for that tax year that the claim is being filed for, a copy of the original farmland preservation agreement. If you have submitted a farmland preservation agreement with a previous year's farmland preservation tax credit claim and no information has changed, you do not need to enclose a copy, but if changes have occurred, you will need to file you'll need to file that with your tax claim. You will also need to include a copy of the closing statement with the buyer and seller's signature and a copy of the executed deed or land contract if the property was sold during the tax year. If it wasn't sold, there wasn't any land changes, you do not need to include that. You should also include a copy of documentation verifying percent ownership if it's applicable to your situation. So if it's not an individual who's owning this land, if it's a trust or a partnership, you should include that information in there so they can verify the percent of tax credits to go to which person. And then lastly, include a copy of a statement signed by the county treasurer indicating that the previous year's property tax bills were paid in full. Just as a note for you, if any of the taxpayers' property tax bills for that year, for the year the credit is being claimed, showed as unpaid for prior year's taxes. So you need to do this if it shows as unpaid, correct?
If there's something unpaid, you will see that on your property tax bill. And at that time, some people go in to the county to pay that tax bill. You still have a return that shows unpaid. So that's what the statement is doing. It's saying that you have corrected this this back taxes on this parcel. And so that's the only time you need to send it, though. Perfect.
All right, so now we're going to talk about the attachments you need to include on a Schedule FCA. First and foremost, you're going to need to make sure that you have a copy of the certification of compliance issued from the county the eligible farmland is located in. This must be submitted every time there is a change or a new one is issued. So talk to your landowner to make sure that you have the most up-to-date copy of the certification of compliance when you're filing. Depending on where their farmland is located, they may receive these on a more regular basis, or it may be every few years. You must also include copies of the property tax bill for the year that the credit is being claimed. You will need to include a copy of the original or modified farmland preservation agreement the first time that you apply for the tax credit, and then any time that there are changes done to that farmland preservation agreement. So if it's modified for more acres to be included, if land is being released, any of those changes need to be, that needs to be sent over to the Department of Revenue with your tax claim. If land is bought or sold during the taxable year, a copy of that closing statement with the buyer and seller's signature and a copy of the executed deed or land contract is required with that tax claim. And then again, if it's not an individual filing for the property or for the farmland preservation tax credit, you'll want to include a copy of documentation verifying percent ownership if applicable. So one of the big things with filing using Schedule FCA is this requirement of a certification of compliance. So this started in tax year 2016. Landowners have been required to verify their compliance with state soil and water conservation standards through this certification of compliance. This is verifying that all of their farmland is in compliance with these state soil and water conservation standards, not just the farmland that's eligible for the tax credit. Compliance is verified locally by the County Land Conservation Department, and these are going to be the people who are giving the landowners this certification of compliance. The certification of compliance has a unique 7-digit number, and that number must be included on Schedule FCA in order to claim the tax credit. If you don't have that number, you will not be receiving the tax credit.
Correct. You'll probably be getting a letter asking for an explanation.
Mm-hmm. If there are any changes to ownership, if any new land is acquired or sold, the certification of compliance must be updated. So if you have a client that you're working with and who has recently bought or sold land, you should encourage them to talk to the County Land Conservation Department to get that updated before the end of the taxable year. So I just wanted to share with you the current state standards that we're asking landowners to meet, not because I'm expecting any of you guys to become conservationists in your own right, but just so you kind of understand what your landowners are being asked to do when they come to you with these certifications of compliance and kind of what that means. So all of our operations are required to create and implement a nutrient management plan that meets the Natural Resource Conservation Service 590 standards. If they're not doing that, first and foremost, they're not going to be receiving that certification of compliance. Then we'll break it up between crop and pasture operations and livestock operations. If it's a mixed operation where both is occurring, then that farm will have to adhere to both of those standards. But on our crop and pasture operations, the biggest thing is ensuring that soil is kept on the ground. They're making sure they're checking their preventable soil loss, and their tillage or other activities are not exceeding our tolerable soil loss, which we call T. That they're not tilling within a minimum of 5 feet of a bank of a surface water, so that's our lakes, our rivers, our streams, to try to keep that soil from eroding into our bodies of water. And they maintain an average phosphorus index of 6 or less and do not exceed a phosphorus index of 12 over the life of their nutrient management plan. So when these landowners are working, or these operators are working, most of these are addressed in their nutrient management plan. So if they're meeting those and they're showing up in their plan, then they're going to be good to go. Some of these also do require the County Land Conservation Department to go out there to verify that they're still meeting these standards. So for a livestock operation, our big 3 here is limit agricultural runoff by preventing significant discharge of wastewater from livestock-related buildings and structures from entering our bodies of water, and clean water runoff is diverted from all livestock-related buildings or structures. So we're just trying to prevent any of the nasty stuff that comes from livestock operations from getting into our clean waters or open and lakes and streams and rivers. We also want to limit livestock access to open bodies of water and maintain vegetative cover there so we don't get any erosion on our banks. And then lastly, we want all of our new manure facilities built to code, and then all of our facilities across the state are maintained to prevent the overflow of manure. Unused manure storage facilities are closed, and then if there's any stacked manure in unconfined piles, they're away from our bodies of water, our streams and our lakes. If you are working with a landowner that has an agreement signed before July 1st, 2009, the standards that they're subject to may be different. If you have a client with one of these, you should encourage them to talk to their county conservation department to confirm what standards their lands must meet. But for most of the folks that you are working with, they're probably most likely going to need to follow these kinds of standards. So if you get any questions about this, again, I'm not expecting you guys to be conservationists. You should direct their attention back to the county land conservation department, because they're going to be the ones who are working with them and confirming their compliance with these standards. So along with their certifications of compliances, landowners can be issued notices of noncompliance. So that's basically where the County Land Conservation Department identified that they did not meet one of those standards on that previous slide. If you're filing under Schedule FCA, they will have had, if they receive a notice of noncompliance as at the end of the taxable year to which the claim relates, there must not be an outstanding notice of noncompliance with a soil and water conservation plan or standards issued against the taxpayer's farm. Basically what that means is they cannot have a notice of noncompliance at the end of the year in order to claim the tax credit. If they do, they are ineligible to claim for that taxable year. For folks that are filing on Schedule FC, there must not be an outstanding notice of noncompliance with soil and water conservation standards against the farm at the time of filing the tax claim. So if they're filing on Schedule FC, if they cancel the notice of noncompliance before they submit that filing, they're okay. It does not have to be dependent at the end of the taxable year, but it still does need to be canceled before they file that tax claim. So it's not infrequent that farmland changes hands, new owners purchase farmland, parents give it to their children, or they put it into a new entity. So a single individual person will put it into a trust or a partnership. So, and that happens quite often. So when we're working with landowners, in this, there's some special considerations that we have to do when we're talking to them about filing their tax claim. So on Schedule FCA, the taxpayer, or the taxpayer for the land, the person who's eligible to claim the tax credit, has to be the landowner at the end of the year, so by December 31st. If they own the land, they sign the paperwork on December 31st, then they're the ones who are eligible to claim the tax credit. Again, you have to include a copy of the closing statement with the buyer's and seller's signatures and a copy of the executed deed or land contract with your tax credit claim in order for that to go through. Additionally, the new landowner must obtain an updated certification of compliance from the local county conservation department, verifying that the farm is in fact in compliance. If you're working with a landowner that's filing on Schedule FC, the buyer and seller may claim the tax credit based on the property taxes paid as verified through the closing statement. When you're filing on a Schedule FCA and there's a change of ownership, you should make sure that you're including a copy of that closing statement with the buyer and seller signatures and a copy of the executed deed or land contract. All right, so with both schedules, a claim may be filed at any time up to 4 years after the unextended due date of the claimant's income or franchise tax return. So that means, for example, the deadline to claim the 2021 tax credit for a calendar year filer is April 15th, 2026. This does give some folks some time. If they purchase land at the end of the year and they need to get their, everything in order for that, they can file the claim later. It's already built in there for that. A special consideration when filing using Schedule FCA, that taxpayer has to include a certification of compliance that shows that property was in fact in compliance at the time of the claim that they're filing for, if they're filing for a previous year. So if you have somebody who's going to be claiming 2019 tax credits for their farm, they'll need to contact the county conservation department and work with them on that certification of compliance. And it's up to the landowner to, have that communication with them if they want to pursue that. But they'll need to have that conversation with the county. All right, so with all the different ways that folks can participate, it can be a little overwhelming to determine which areas are eligible for what type of participation. So I'm going to talk to you guys a little bit about the different ways that you guys can figure out how your clients may be participating in the program, or if your clients are eligible to be claiming the tax credit, and they're not yet. So landowner can verify if they're located in a certified farmland preservation zoning district by contacting their zoning administrator. Depending on where they're located, this may be a county, this may be a town, it may be some other type of municipality, but you can let them know that they can contact their county zoning administrator to ask that. DADCAP does annually publish a list of zoning jurisdictions with certified farmland preservation zoning districts that we make available in the early winter on our website. So the start of the year, we have that updated for you guys to look at. All of our farmland preservation agreements are recorded with the lands that it covers. So if you have a landowner that has recently purchased land, if they've done a title search, one of these agreements should pop up if their land is enrolled under a farmland preservation agreement. If the land is enrolled in like an expired agreement or it's not enrolled, then it wouldn't pop up, but that's one good way to look for it. They can also always contact us at the Department of Ag, Trade, and Consumer Protection to see if their lands are covered. We'd be more than happy to look that up for them. We can also provide them copies of their agreements if they didn't run a title search or they just need an extra copy for whatever reason. We would be more than happy to do that for them. Lands located in a designated agricultural enterprise area are eligible to enroll in a farmland preservation agreement. So if you have a landowner who's interested in seeing if their lands are eligible to sign up in a farmland preservation agreement, you can have them visit our website, which is linked here, or they can contact their county conservation department and talk to them to see if their land is eligible. I'm always going to encourage a landowner, if they want to get started in the program, to contact their county land conservation department, because they're going to be the point of contact to get started in the program, either by enrolling in a farmland preservation agreement or starting with their certification of compliance. That should be kind of their first person-to-person contact with the program. So I have here a list of online resources for the farmland preservation tax credits. Again, we can share this PowerPoint out with you guys at the end along with the recording, so you guys will have access to this sheet here with all of these links. But we have on here our Farmland Preservation Program homepage, the DADCAP Farmland Preservation Information for Preparers resources. We have the Department of Revenue's Farmland Preservation Tax Credit Frequently Asked Questions, a digital copy of the Department of Revenue's Publication 503, which is Wisconsin Farmland Preservation Credit for use in preparing for currently 2020 claims, but it is updated annually as they get ready for the next upcoming tax season. We also have on here a link to County Conservation Department Staff Directory. So if you have a landowner that's in your office working on filing their tax claim and they're not sure who to contact, you can share this with them. This will give them like the phone numbers of who to contact. They can sort by which county they're in and figure out who would be the best person to talk to about that. Then last on here is the Department of Revenue's tax form and instruction site. So you can pull those tax forms right from the site, depending on if you want to file with Schedule FC or FCA. Both the forms and the instructions are available there. And then this slide is our contact information. So if you have questions for the Department of Revenue, you can contact their Farmland Preservation Tax Credit team. Their phone number is here available for you, or you can contact them through email. And vice versa, if you have any questions for the Department of Ag, Trade, and Consumer Protection, you can contact our Farmland Preservation Program team here. Our phone number is available here with 1 extra 2 at the beginning. I can get that fixed up and sent to you guys so you have the correct phone number, or you can always send us an email. Either way, we'll get back to you as quick as we can. As tax season rolls around, it does get a little bit busier, but we do try our best to respond as we can. All right. So now we will open the floor for any questions that you may have about the Farmland Preservation Program or the Farmland Preservation Tax Credit. You can take this time to unmute yourself to ask a question, or you can provide a question in the chat box, and we'll read it out loud and get back to you.
We actually have some questions that have already been submitted.
We love it.
So our first question comes from Deanna. If a retired farmer has land in the AEA and land is rented to their children and they meet the gross income, the retired farmer gets a certificate of compliance. Are they eligible?
Yes. So landowners who rent their land can claim the Farmland Preservation Tax Credit. What they would use would be their renter's gross farm revenue to satisfy that eligibility requirement. So yes, in this example, the father can use his children's gross farm revenue off of the land, to be eligible to claim the farmland preservation tax credit.
Question. If the farmland preservation was set up in the husband's name, now the wife is the only surviving spouse, they must call the county to get the change made for their certification. Is it necessary to include a copy of the agreement name? So, just to clarify, Anna, if we're understanding your question correctly, you're first asking, do they need a COC update when the was issued just to the husband? Or are you saying, do they need an update of their farmland preservation agreement if the agreement was issued just in the husband's? So, just to clarify either scenario, so for a farmland preservation agreement, if it was issued in the husband's name only, so it may be that a husband owned the land independently at the time of the agreement enrollment. The husband passed for any reason, the agreement runs with the land until its natural expiration. So whoever succeeds the husband in ownership would then, in theory, establish eligibility to claim the farmland preservation tax credit. They inherently would have to go work with the county to get a certification. The one kind of qualifier here, and I think Randy's ready to jump in, is being Wisconsin is a marital property law state, that if the certification was issued to the husband and wife, some counties may not issue a new certification.
That's quite possible, and it also kind of gets into the property tax bills that are also issued. If we see a cert that has names that don't match what's on the property tax bill, that might ding it. If we can determine if it's a married filing joint person where one passes away, you can kind of follow. In a perfect world, make the case that it is a entity change, which means it's a new farm, which means it's a new certificate of compliance. It would be best if you can get that. If it pulled up and an auditor took a look at it, they might be able to put two and two together and realize what the situation is.
So this was my question. Can you hear me?
Yeah.
Yes.
Okay, sorry, I wasn't unmuted the first time. So my parents are joint owners. My father has passed away. We did contact the county office, and they told me that nothing would need to be done. My mother's not changing and taking my father's name off the property tax bills, but they acted like there's nothing that we need to do. I didn't worry about it for their 2020 taxes because my father was still on the taxes, but I'm just wondering if there's an issue of anything that I need to get the county to do. If that certification, I'm assuming they will, I would assume they would now put it in her name, but I don't know that. And I just wanted to know if there's something I need to reach out to them about getting changed before we would file her 2021.
It sounds like it shouldn't be a problem, to be perfectly honest. If they don't make the name change, we would be able to spot the old name change with the person that was filing jointly and now suddenly isn't. Same way with the property tax. So there shouldn't be a problem there.
Okay, thank you.
If there is, send us an email.
All right, thanks.
Welcome.
So your next question. I live in a county that has farmland preservation. Can you comment as to why many counties are not in the program?
Yeah, so this program is, it's a voluntary program first and foremost, but also with like farmland preservation zoning, there's a couple of things that municipality needs first in order to participate in. First and foremost, they need to have general zoning or have adopted general zoning in order for them to create a certified farmland preservation zoning district. Now, there are a couple of municipalities across the state that do not currently have zoning, or they don't have an interest in pursuing zoning as a tool for their community. So in those areas, we won't see these certified farmland preservation zoning districts. On the other hand, with our agricultural enterprise areas, we do have a limited number of acres that we can designate as these agricultural enterprise areas. Currently, we're capped at 2 million acres. Right now, we have a little bit over 1.5 million designated. So that kind of leads into, there's a limited number of these agricultural enterprise areas, which does limit the number of areas that would be eligible for those farmland preservation agreements. So it's really up to like the local community to really drive this program. They're the ones that show interest in it, and we kind of help administer it from the state level by reviewing zoning certifications, letting them know if their zoning district works, or reviewing these designation petitions to see if these agricultural enterprise areas can be designated into these areas, but a lot of it is driven by local interest. So in some of these areas, maybe there just isn't local interest in it, or they're not aware of these programs, or a lot of different factors kind of go into that.
Beverly says, is gross income only for crops, or can the gross income also be livestock?
In our publication 503, there's a definition of what gross farm revenues is. It can be from livestock also. It is, let's see, I think it also involves trees. On page 5 of our publication, they give some examples of gross farm profits. It includes beekeeping, feedlots, egg production, floriculture, fish and fur farming. So there's a whole, raising mint, there's a whole list there. So there is some flexibility on what gross farm profits is.
Yeah, so you can, use it from the sale of your livestock. Let's say you have pasture land and the livestock aren't located on that farm. You have somebody who rents out, 60 acres for pasture land. The gross farm revenue for that pasture land would be for like the percentage of animals that pasture land feeds when they go to sell it. I know that gets kind of complicated and it can get kind of confusing, but if you have like a specific, if you're working with a more complicated farming situation, you can always feel free to reach out to us and we can talk you through how that works for that farm. But it really can come from any of these varieties of agriculture that we define, which include kind of our conventional ag, which are these like croplands or pasture lands or livestock, but it can also include quote unquote unconventional agricultural lands, which include like forest land,
and Christmas trees. A lot of Christmas tree growers out there now. Turf
farms, floriculture, even things like fish farming can be included in that. So our definition of agriculture is very wide.
Joseph says, can we get a copy of the slides? And yes, all
absolutely.
Brenda says she can't hear the participant questions and she would like us to repeat them.
Absolutely. Sorry about that, Brenda.
That is the last of questions in the chat. The floor is open.
All right. Is there anybody who would like to ask a question and unmute themselves? All right. If there are no more questions, again, here is our contact information. I'd like to thank you so much for joining us today. It was a pleasure talking with you guys and talking to you guys a little bit about this program.